All right, so today's topic, we're going to be talking about uh, a topic that for most of us, we really don't understand. Our clients don't understand. No one really understands, I think. But it's something that it's necessary on a day-to-day basis to have, and that's insurance. So there's all kinds of insurance. Um, we deal mostly with real estate or property insurance, and as agents, it's part of every single transaction that we do. However, we just let somebody else take care of it. That's usually the lender, right? We let the lender take care of the insurance. We don't worry about it. We don't even know really what it covers or what it's about or nothing. We just know that it's part of the transaction and it's a requirement on every deal. However, over the last couple of years, Marco actually, he informed me of little ins and outs of insurance, things that I didn't know about I found pretty interesting. And I was surprised as to, really what it offered and how it works. So today we have Marco Alvarez and we have Ray. What's Ray's last name?
Ray Chavez.
Ray Chavez from Farmers Insurance. They're on and they're going to basically break down insurance and answer some questions and tell us some stuff that we didn't know about it. So if you have any insurance questions, and again, insurance is one of those things, it's almost like accounting or finances where it's kind of like boring. It's like, okay, like, nothing sexy about it, nothing exciting about it. But we need to focus in on the next 40 minutes. That way we could just learn and then we could educate ourselves and our clients. And then ultimately it's going to make us money or save us a lot of money, right, in the future. So Marco, thank you for joining us today.
Mm-hmm. Yep. First and foremost, thank you, Voltaire, for having me. It's an honor to be on your platform with your Zoom meetings. Again, my name is Marco Alvarez with Farmers Insurance. I am the principal agent, and I have Ray here on the sideline here with me as well too. He's the operations manager, and he does all the day-to-day activities. The way we work is I'm more on the field, seeing with the clients and all that, and Ray takes care of the office, all the incoming calls and all that. Voltaire, you asked me to talk about a little bit about the insurance and what is our some interesting topics about the insurance, right? I know we all talk about the home insurance, but there's very many different types of products within the home insurance as well too, to see what type of product we actually need. There's times when we talk about homeowner insurance usually for our clients, or renters policies as well too for that. And there's also the special dwellings, and then there's landlord protectors. So all these types of policies have different types of coverages, whereas maybe sometimes our clients might not really understand what the difference is, right? Obviously, what we're always fighting here is clients talk about price, and sometimes it's like, why is it cheaper here? Why is it cheaper there? Well, sometimes we have to compare apples with apples, and even with that said, it's sometimes not even the same apple, right? It can be a different type of apple: green apple, red apple, the Fuji apples. But I wanted to start off and talk about some coverages about the home policy as well too, and one of the things that we hear a lot is we get calls from clients talking about they had like a sewer backup, and one of these types of coverages, it's actually, the home policy is almost what do you call it, like it's almost like a bare bone policy, right? And you can add a lot of things to it in the form of endorsements or floaters. So one of the important endorsements that we like to add, especially when they're older homes in older municipalities, is the sewer backup, right? Because sometimes it's like there's issues with the plumbing and all that. If it's coming from the city, right? The sewer backup is coming from the city. That coverage is not covered in your homeowner's policy, right? You actually have to add that to your coverage.
Got it. So for starters, Marco, 99% of the insurance policies that are issued at the close of escrow when someone buys a home, what does a bare bones cover?
Okay, we'll start with that. Again, we'll talk about more of the standard policy, right? It'll cover the dwelling, which is what's most important for the bank, right? Make sure that the dwelling is covered. And that means the whole structure of the home. That'll cover, you know, the walls, the flooring, the roof, and you know, basically what they say is, you know, you get the house and you turn it upside down. Whatever doesn't fall off is part of the dwelling. Okay, so but now that's going to cover against, you know, most perils, right? But you know, something like the sewer backup, if it's internal, then it is covered. But if it comes from external, from the city, then that is not covered. Does that make sense?
Yeah, so it covers if you turn the house upside down, you shake it, and then whatever is intact, it's covered. So the roof, the walls, the flooring,
Yes.
the sewer backup internally, electrical.
Electrical is covered as well too. I mean, it just depends on what caused it as well too. If it's a covered peril, and what we mean by covered perils is, you know, something like fire, wind, theft, you know, or storm, right? Those are the covered perils, right?
So fire, wind, flood.
Flood is not covered actually.
Okay. So fire,
Flood,
wind. What else did you say?
water.
Water,
Well,
meaning
yes.
meaning like it rains and it just like your house, or no, or internal plumbing where burst.
Yeah, it's internal. Like for example, internal flooding is covered, right? For example, you know, I always give this example that you are bathing the kids or you're bathing the dog, and you leave the water running, right? You leave the tub running, and it floods the floor. That's going to be covered, right? But if it's more like a natural flood, right, whereas the whole block is flooded because it was just, you know, 3 days of nonstop raining, well, that's not covered. And that's why there's a separate policy called the flood insurance.
Cool. So we'll go over the separate policies or the riders in a bit, or I think you had a couple other names for them. So what's covered is if there's a fire, it's covered. If wind knocks over your house, it's covered.
Yeah.
If you leave the water running or you go on vacation, that happens a lot, right? People go on vacation, they come back and they're like, house is flooded because whatever plumbing issue they had bursted, right?
Yes.
And then what else? What other peril? Theft, you said?
Theft is covered as well too.
So tell us more about theft. If someone, go ahead.
So yeah, so theft is covered. It's actually covered under your personal property, right? And so your personal property is, for example, your refrigerator, your clothes, computers, and all that stuff that's in your house. But it's also covered outside of your home as well too. All right, and that's what a lot of people is surprised about as well too. But if you have a storage or something like that, that you have personal property in a storage, is covered. If you the only difference is that there's a deductible to it as well too, right? So it says like, oh, you know what? In a fire, for example, you lost your whole home, and says like, okay, well, there was about I don't know, $75,000 of personal property, and your deductible is at $2,000. Well, we're going to pay out the $73,000. Does that make sense?
Yeah. So basically, if you know, this happens all the time. Someone says, "Hey, my car got broken into. They stole my laptop. They stole my this, my that." That's all personal property.
That's personal property.
So basically, you could file a claim against your homeowner's insurance, even if the theft occurred outside of your home, whether it's a storage unit, whether it's your car that you parked or whatever. Then you could file a claim on your homeowner's insurance, which is pretty cool because a lot of people they don't understand how insurance works. So a lot of people just take the loss. They just take the L, and they're like, man, I got, someone broke into my storage unit or whatever, and they never see that anything from that. So
exactly. Yeah. And so, and also, for example, you can talk about, like, all my jewelry was stolen as well too. In the standard policy, Voltaire, you have limited coverage on expensive items. For example, you have about up to $1,000. As an example, you have about $1,000 in jewelry or $1,000 in guns. But you can actually add what's called floaters to your homeowner's policy as well too. And usually with these high-end clients where they have, maybe like an art collection or sports memorabilia as well too. They have like really old baseball cards or basketball cards. All that can be covered in your homeowner's policy, but you have to let your home insurance company know that, right? It's not going to be covered automatically as well too.
Okay.
Cool. So, for example, we one of the biggest things that we get a lot as well too is engagement rings, right? These are, I've seen some $30,000, $40,000, $50,000 engagement rings, and they want to make sure it's insured as well too, and we can cover it. We just ask for like an appraisal of the ring, and then we add it as a floater to the policy as well.
Oh, okay, cool. So you can add floaters to cover personal belongings.
Right.
That's pretty cool. So now let's talk about, let's see here if there's any. So basically a question. So do you create an inventory list of belongings when you sign up with, let's say, Farmers, whenever you get an insurance policy? Is that how it works to cover some of those items, or no?
Yeah. I mean, usually what we like to do is when we close on an escrow home, when there's a purchase and we go with the client, we talk about all the coverages and all that. And what was the question again? We'll sorry, I lost my train of thought.
So do you create an inventory?
Take pictures. Inventory. Sorry, I lost it right there. And what we ask them to do is take video or pictures of the house, of all their personal belongings, because if there is a loss on the property, then they have something to go back up on. And it's like, okay, this is also even like a reminder for them as well too, because they might even forget. I was like, oh, I forgot I had this, I forgot I had that. So it covers the client, and it covers the insurance company as well too, against fraud as well too, because sometimes this is like, oh, I had this, I had that, and there's no way to prove it.
Okay, cool. And then so if someone does file a claim against their stolen backpack and laptop and jewelry or whatever, does that increase the premium for the insurance on a yearly basis? Like, do you guys charge more on next year?
Yes, you do. Obviously, whenever there's like something that the insurance companies cover, when it's up for renewal, obviously, is when you can see the reflection of that claim, I guess you can say.
Okay, cool. All right, sounds good. Just ballpark, what's the typical increase? Is it 10%, 20%, or?
It depends. It's really hard to say because, if we're talking about like a claim on personal property, or we're talking about a claim on the dwelling as well too, it can vary as well too. And then it also depends as well too. Maybe you have two thefts in one term of the policy, which is a year. Well, then that's going to obviously make it go higher as well too.
Okay, cool. Now, a couple of those riders or floaters that you mentioned, is one of them considered like the earthquake, right? We're in California. A lot of people ask about earthquake. They think that earthquake coverage is included in a bare bones policy at the close of escrow. So how does earthquake insurance work?
Okay, so earthquake covers, you know what? Can I give this one to you, Ray?
Earth movement. Pretty much, yeah. Anything earth movement, and
Can I flip you over?
And
I'm gonna flip it over to Ray here, okay?
Yeah. Flip it over to Ray. Vénate. Oh, yeah, you good, man.
I'm here. I'm writing down all the notes and stuff like that. But with the earthquake policy, it's we're kind of like the middleman. It's done through California Earthquake Authority. So they're the actual insurer that insures you for earthquake. There's limitations, for example, on deductibles, on how the customer is going to pay, and it goes hand in hand with your fire policy. So if your fire policy is covering you for $250,000 for dwelling, then the earthquake is going to cover you for $250,000. And it also renews every time your fire policy renews, your earthquake policy is renewed. So there's policies that go hand in hand. However, they are separate policies. So insurance companies are pretty much the middleman to the California Earthquake Authority, but by law, we have to offer it. So whenever you get an offer renewal, for example, you're going to see an offer for earthquake because the state mandates it.
So is that like a state agency that covers all of California, basically?
California Earthquake Authority is a government agency that covers you for earthquake, and the same for flood. I mean, I know the question is geared for earthquake, but the same for flood. Flood policies, they're sponsored by FEMA. So flood policies, insurance companies offer it, but it's not backed by the insurance company. It's FEMA. So California earthquake policies and flood policies, they're kind of like it's the same concept.
How much typically is a earthquake policy?
That's a great question. And I found out pretty quick that it depends on your area, your zip code. I have policies where they're $1,000 a year, and that's expensive. And I have policies with the same dwelling coverage, even greater coverage, where it's only $300 a year.
Can you give us a like the last insurance one you did? I don't know if you remember, but like whatever zip code, like let's say Chula Vista or National City or somebody North Park, something that somebody would know, like ballpark, how much it would be or no? Off the top of your head, do you remember anything?
Yeah. Anywhere between $300 and $350 a year, but it really depends on that deductible. And with earthquake, there's also limitations to coverage. For example, I gave you the deductibles, right? 5%, 10%, 15, 20%. You can't go up beyond those type of deductibles, but also for personal property. So the max that we could insure you for personal property, I believe, is $200,000. So it's not like if we could add a whole bunch of personal property on there. So that dictates price as well. Loss of use, that pays for hotel meal expenses. The max we could do is $100,000 on that. So in regards to price, it really is going to depend on what I'm covering you for. Am I going to cover you at $50,000 personal property? Am I going to give you a 10% deductible or a 5%? Here at the agency, Marco and I, we don't go beyond 10%. We only quote 5% or 10%. Now, we give the customer the option to go higher, but we tell them, you know what, if there's an earthquake, if you have a loss, you want to recuperate as much as you can. Imagine if I give you a 25% deductible and you have a $100,000 earthquake loss, you're only going to recuperate 75 grand. Where's the other 25 grand going to come from to rebuild? It's easier for you to rebuild with a 5% or 10% deductible than a 25. So price really depends on what I'm going to offer you. Am I going to offer you high personal property, high loss of use, a low deductible, a high deductible? But and there is a difference in price.
Yeah, of course. One thing I realized in dealing with you guys for all my personal insurance was that it's not just like you just pull the trigger on anything and get a quote. You actually have to sit down. You guys look at the entire situation of the client, right? And then you guys put together a plan and say, hey, look, you're going to have this much in personal property loss, this much in other losses, and then you put that together with the car, you put that together with any other type of insurance policy. So I think that's pretty beneficial for anybody who for all our clients, you know, or even yourselves, real estate agents, you know that you have to be property insured. That way, one catastrophe doesn't just wipe you off, right? An earthquake or a flood or something like that. So a couple more questions. So we already talked about kind of like the owner's policy and the bare bones, and then like, you know, earthquake that you could add. You could add the flood. You could add, what other floaters are there that you could think of, Ray? Anything else?
The jewelry, guns,
Okay, like
fur,
extra.
the rugs, the expensive work of art. Those,
Okay, cool.
those are all covered under personal property with limitations. So like Marco was saying, you have to add those additional floaters to the policy to be covered for the amount that you want to be covered.
Okay, cool. Now, so we talked about homeowners, right? And again, a lot of us, we don't take none of this into consideration whenever we're doing an escrow. So, so we talked about homeowners. What about renters? There's a lot of renters out there, and there's a lot of tenants that we have that are renters, and then we require them to get a renter's insurance, but we don't even know as landlords really what it covers or why we're asking them for it. We just know that it's standard practice. So what's a bare bones rental policy cover, and is there any floaters on that?
The answer is yes, you could add floaters just like a homeowner's policy. There are certain limits to the floaters that you could add, but you know, the renter's policy is geared to really protect the tenant, right? You know, the landlord says, you know what, you have to have renter's insurance. Well, the landlord is protecting his liability portion. So if there's a liability, if somebody comes into the property, slips, falls, whatever, you know, they hurt themselves, now you've got the lawyers going after everybody. So what the landlord wants to do is he wants to ensure that the tenant has that liability portion. So normally landlords ask for 100,000, which I think is too low. But that's what the landlord is requesting, or that's why the landlord is requesting that the tenant have insurance. The
How
other
much you think is
portion,
sufficient?
though, I think 300,000 at the minimum should be what a tenant should be purchasing for that liability. But the renter's policy really is geared to protect the tenant, and there's two important parts of those policies. One is their personal property, right? Because if there's a fire, of course, the landlord has their policy that's going to cover the structure. But what about the tenant's personal belongings? They're not going to be covered. So the tenant wants to have that renter's policy, and the minimum is 5,000. The maximum is 100,000 for personal property. The other aspect, which for me is the most important one, is loss of use. So let's say that the kitchen burns and now the tenant can't live there because you're gonna fix up the kitchen and they can't cook, they can't do anything. So here comes the landlord and says, well, you know what, you're gonna have to move out for 2 weeks or a month. I'm not gonna charge you rent, but I'm not gonna pay for any of your expenses. So now where's the tenant gonna go? Really, I mean, you think about it, is he gonna go to his neighbor's house, to his family's house? That's a huge inconvenience. So the tenant opens up a loss of use claim, where
Loss of use claim.
the policy will pay for hotel, meal expenses. So now your tenant is going to be able to move somewhere while you're repairing the home. And
so if you're a landlord and there's a fire, wind, water issue, and your tenant has to be displaced while you do the work, then they could just, you would instruct your tenant to file a claim on their renter's policy. That way they could get themselves a hotel room and they could get themselves food.
That's right.
So where a lot of us landlords, I think we just feel like, shit, we got to pay for them. So that's not the case. They get covered through their own insurance policy.
Well, there's not a lot of landlords, and no disrespect to any landlord, that think like you. There's actual landlords out there that say, you know what, you need to move out, and I'm not going to charge you rent, but I'm not going to pay for any of your expenses. I'm not going to put you in a hotel. That's on you. And their thought I mean, you know, it's business, right? Their thought process is, I'm not charging you rent. So, you know, but you could come back in a month when it's all repaired. You know, the home is going to be available. But so it's important. Those coverages are extremely important for a tenant.
So a tenant has basically liability coverage for the landlord, basically, personal belonging coverage, personal property coverage, and then they have loss of use coverage.
And that loss of use, yep.
Okay.
And keep in mind that the liability also protects the tenant as well, just like a regular home policy. So, go ahead.
So liability protects the tenant as well.
Oh yeah.
Yeah.
I'll give you a brief example, just very brief, because these are my favorite topics. So my daughter and I we're shopping, right? We're at the grocery store. Thank God we have a basket full of groceries. And my 7-year-old and myself were pushing the cart. And I don't know how, but we let go of the cart. And here goes the grocery cart, you know, strolling. And it came this close to hitting a brand new vehicle, a red one too, a beautiful. Well, you know, that would have been maybe $2,000, $3,000 worth of damage. Where do you think, or who do you think is going to pay for that? Me, right? Out of my pocket? Mm-hmm. Or maybe I'll open up a claim on my home policy. And that's a type of liability that's covered because
so
it was accidental.
And that's a great thing that I think we're all learning on this call. I know Ozzy had a question. So you're covered, even if it's not in as a renter, you're covered even though the accident didn't happen at your home, even if it's at the grocery store.
Yeah, I'm playing softball. The bat slips out of my hand and hits the first baseman. He goes to the hospital on a concussion. That's a liability for me. It was an accident, but I could open up a claim against my liability, and it would be covered. Something like that would be covered. Now, if you beat up your neighbor, you're not covered. Right?
If you start it, but if you get beat up, then it's all covered. So,
yeah,
just don't fight back. Yeah. Don't fight back.
But those are things that people don't know. I mean, those are coverages that, you know, people don't know. Hey, my liability covers me for that. You know, I'm covered anywhere in the world. Yes, anywhere in the world.
Yeah, that's amazing. And now the so when it goes back to that grocery store incident, so what happened? So the real story is the car got dinged up and you just jumped in your car and took off, right?
No. The real story is that it didn't happen, but it almost happened by this much, and it would have caused lots of damage. You know, because you know, I'm sure it would have. You know how much a paint job nowadays costs? I mean, it's not $500 anymore. It's thousands of dollars, you know. But my point is that if it would have happened, my home policy would have covered that incident. Not my car insurance because I wasn't driving. It wasn't an auto incident. It was a negligent accident on my part. You know.
Yeah, that's pretty
cool. But it didn't happen.
I
just like to use that example.
I think everybody right here is kind of starting to understand that there's different insurances. You know, there's car insurance, there's renter's insurance, there's homeowners, and then there's a landlord protector, which we're going to get into. There's health insurance, there's an umbrella coverage, right? And in our life, we have to go through and we have to understand, like, okay, what insurances do we need? Which ones do we need to be covered? Which ones overlap? So we won't overlap, maybe. So we're not underinsured and not overinsured. So insurance is like it's a huge thing that we should all know exactly how to work it. Now, going into, so we talked about the homeowners, typical homeowner coverage. We talked about tenant coverage. So now let's get into landlord protector coverage. So, you know, one thing that I forgot to ask on the homeowner coverage or even on the renter coverage, what if your dog bites somebody? Is that covered?
The answer is yes. It's covered under liability. And something really important is to let your insurance agent, if you do have a dog or not, because farmers will cover you if you didn't add the dog to the policy that you had a dog. Farmers 99% of the time will cover you, but there's insurance companies that say, oh, you know what? you never told me about the dog, so we're not going to cover you. And that's really important that you disclose if you do have a dog. Now, there are certain dogs that are excluded that insurance companies will not insure you. Take a guess, which one breed that you think might not be
Pit
covered?
bulls.
Yep, pit bulls.
I was gonna guess Chihuahuas, but yeah,
Yeah,
makes
yeah.
more sense, Coach.
Yeah,
So what type of dogs? Is it just pit bulls or Rottweilers or?
pit bulls. Rottweilers are new included. I think there's the wolf dog, Marco.
I don't think so.
There's there's certain breeds, but the main one was the pit bull. But I think Rottweilers were just recently added to the list. Insurance companies change all the time, and they could even add a Chihuahua later on in the future if they want. It depends on how dangerous they become.
So all that insurance paperwork that we receive in the mail that we just toss, we're supposed to read it because it might say, hey, look, there's been a new exclusion on what we cover, and Chihuahuas are now added.
Exactly.
Yeah, and I got a question about that, if I can.
Yeah.
Remember during the Cedar fires, when a lot of those people up in Scripps Ranch had their houses destroyed, and their coverage was like for $150 per square foot. And when I was reading the newspaper articles, the contractors are coming in at $250, $300 a square foot. So where did the extra money come from? Out of the owner's pocket?
Yeah, you know what? That's a great question. I'm glad you brought that up. It's really important that you understand your market and your area. One of the questions that Valterra sent in Marco's email or text was, how do we know what coverage is good? And so we use what we call a 360 cost estimator to determine how much it would cost to reconstruct the home based on year bill, based on square footage. So $150, it's really low. So those people that didn't have enough, the insurance company was only going to pay what they insured you for. If it's $250,000, that's what they're going to insure you. But now it's going to take $350,000 to reconstruct your home. I believe that the government was stepping in the Cedar fires, where they were kicking in money to help a lot of those people, but or it was out of pocket, or the customer just walked away from it.
Yeah, but see, because my homeowners insurance was with AAA, and they had guaranteed replacement, and they just changed that policy. They're no longer doing that, full replacement. And so I think most people have a tendency to be underinsured because of the cost, and the insurance agent doesn't tell them that, hey, you're going to be liable for $20,000, $30,000 between the difference between what you're being, insured for per square foot versus what it's actually going to take to rebuild your house in today's prices.
Well, I'm gonna tell you something, and I know my boss is here next to me, but I would not want to insure you. If I'm saying that to reconstruct your home is $300,000 and you want me to insure you for $250,000, I have to do what you tell me, because ultimately, if your agent is telling you $300,000 and you say you want $250,000, I have to, abide by what you're saying. But I'm going to tell you, you know what? I don't know that I want to insure you at $250,000.
And what I'm asking you is, it seemed like the insurance companies were underinsuring their people, okay, not giving them the accurate information. You see, like the reason why I went with AAA was because they had guaranteed home replacement at the current value, and they just stopped that policy. I just got a letter about 2 months ago, and when I read up about the Cedar fires, I was a little bit shocked to see that people are coming out of their pocket with $50,000, $60,000 because they were underinsured.
Right.
And so what I'm telling you is, if I think my house is worth $800,000, but the comps in the area are $600,000 because of all the remodeling I've done, can I have my house insured for $800,000, or is the insurance company going to say, no, the comps in the area say $600,000?
The answer is yes. You could insure your home for $800,000.
Okay. All right.
Is it going to be overinsured? It can be.
Yes.
Why? because you're saying that the comps are going for 600,000. You want it insured for 800,000, but you're including you're including land value, for example. And insurance companies aren't going to insure you for land, or they're not going to insure you for location. So it's our job to be able to determine, okay, how much is it going to cost to rebuild the structure, as opposed to comp. So if you're, a lot of the companies, if they were insuring at $150 per square foot, that's really low. I mean, you've got to insure somebody for no less than $200 per square foot here in San Diego. And it depends if you're in, what's that community, Ranch Gate community, right? Those expensive, custom homes.
Yeah,
I'm not
Rancho
going to
Santa
insure,
Fe.
I'm not going to insure any house out there for $200 per square foot. I'm thinking $300-400 per square foot.
Right.
So,
Right. But what I'm
so it
saying
really
is, I
depends
just
on
saw that when I was
area.
reading about all the Cedar Fire, there were a lot of people who seemed to get caught in the middle between what they had and what it was going to cost them.
Yeah.
So,
So
you
that's
just
a good
reminded
question.
me.
all right, we can move on. I don't want to belabor this.
Yeah. Yeah. So that's a good question. And it sounds like if somebody wants to be covered for $350 a square foot, they can, as long as you pay for it, right? Ray, and you're just basically overinsured, or maybe not, but you're okay. And now would the insurance company give you that money, and then that we could build it the same way that you built it, meaning with all the same finishes and all that? Like, they'll basically give you the money. They're not going to try to screw you at the end, right?
That's correct.
Okay,
Yeah.
cool. Awesome. Now let's talk about the landlord protector policy. If you're a landlord and you have tenants, what we see a lot of, Ray and Marco, is this: a homeowner purchases to live in the property, right? They live in the property and they live there for 5 years, and they go, I'm going to buy another property. So we help them buy another property, and then they keep their first one. Now, they may keep that same homeowner's policy, which potentially doesn't protect them now that they're landlords. So what policy should they be having, and how does the landlord protector work different?
Well, yeah, and you know what? And that happens often as well too, that, they move from an owner-occupied property to a rental property, and they forget to update the insurance as well too. So, the first thing that we have to do is, tell the clients, that we need to change the policy from what's called an HO3 to a landlord protector. And the landlord protector is extremely important for clients that have rental properties, because not only are we have to cover the dwelling, but the most important thing that changes is the liability, right? The liability is extremely different from an owner-occupied to a rental property. So, the liability on a landlord protector is going to cover you against wrongful eviction, tenant liability as well too. Ray and I were talking about this just yesterday about a client of ours that has rental property. It was in the 92103 area, I believe. So they're older homes, and they had an electrician out there go out there and fix something about electrical issue. Well, months down the line, a little girl was playing by the house and touched one of the wires and got electrocuted. Well, guess what happens there? Who are they going to go after? The electrician or the landlord? So, they go after the landlord, right?
Right.
These kinds of lawsuits are hundreds of thousands of dollars, right? On a normal homeowner's policy, that's not covered because you're renting it out. On a landlord protector, you are covered. And thank goodness that this person had a landlord protector, and we covered that part as well too.
And really quick, I'm gonna mix this with the renter's policy. So your renter is covered under a renter's policy. He needs to move out because the kitchen burned down, and you're not going to charge him any rents, right? So he's going to have to be out for 2 weeks, a month. So who's going to pay you, the landlord, for that lost rents? The landlord protector will pay you up to 12 months of lost rents.
12 months of lost rents for tenants when they move out because of fire, wind, water, right?
For any covered loss.
Exactly.
And any covered loss. Okay, any covered loss. Cool. So let's go back to some of these scenarios because they sound pretty interesting. So someone gets electrocuted, they sue the landlord, it's covered. What if a dog bites, they sue the landlord? You know, I'm assuming that the tenant's policy would kick in first and then the landlord's, right? Because it's a tenant's dog.
Yeah, that's what yeah.
And then what about just regular loss of rent? The tenant stops paying you, is that covered?
No. No.
So no evictions, nothing like that, just because of bad tenants. That's not covered in the landlord's protectors?
It's not.
Okay.
I could say that straight out. It's not, because I've been asked that question a lot, and I've read the policy back a lot, because I go through the policy backs all the time just to kind of freshen my memory up, make sure that I'm answering, and I could answer that one emphatically. No, something like that's not covered.
Okay, cool. And then what about COVID? Are rents covered during COVID, which I don't know if it's classified as, I mean, it's a pandemic. I don't know if that's covered in their act of God. Is that covered or no?
No. I'm getting that question a lot from businesses, and insurance companies are pretty smart. This is what I'm answering very transparently. For some reason, they always anticipated viruses, so they have an exclusion of viruses.
Oh, shit.
Yeah. It's a trip how, pardon the expression, how insurance companies anticipate these things before they're going to happen. And we all were like, wow, there's exclusion for virus. Yeah, there's exclusion for virus.
Wow. Okay. All right. And then let me see. What other situation do you think you could talk about with the landlord protector policy that could be covered? And then after we go over that, then we'll go over the flips, because some people flip properties and there's different coverages for that. So anything else with the landlord protector, like another story you could share?
Well, basically what I wanted to add to that, to the landlord protector is, and your homeowners policy and your car insurance as well too, is the liability, right? What insurance is, it's protection against your financial or economic stability. So, something huge like a car accident or something like of a liability, a tenant liability, can really harm your financial situation. So, it's always important to know that it's all interrelated as well too. It's all connected, and you got to make sure that you're covered the correct way on your car insurance, on your homeowners insurance, and on your landlord protector policies if you have various properties. So one thing that we do offer for clients that have multiple properties is the umbrella, right? The umbrella is going to cover everything, your whole relationship as well too. Your car insurance, your home insurance, and your investment properties as well too. And what the umbrella does is, gives you excess coverage on liability. So I'll give you one example as well too. And I like to use this example because it's a big name, Hulk Hogan, right? Hulk Hogan, he came out with his reality TV show. He was practically retired already, right? And then all of a sudden he started wrestling again years later down the line. Why is that? Well, I don't know if you guys remember, but his son was racing in the Ferrari and crashed, right? And he was with his friend. Well, his friend, who was the passenger, ended up at the hospital and was practically, what do you call, what's that when you're in the hospital and you just, you're brain dead. You're brain dead. Yeah. So obviously the family sues Hulk Hogan for millions of dollars, right? And obviously they won. Now, the wife tried to sue their insurance company, saying like, you know what? Why didn't you offer me an umbrella? Had they had an umbrella, it would have covered everything, right? And they lost because they had it in their comments and their notes. They had very well notated that they did offer the umbrella. So now Hulk Hogan had to start wrestling again to make up
So
for that.
basically, Hulk Hogan, because he didn't plan his insurance properly, he got sued. He lost a lot of money. He could have opted for the umbrella, but he declined it. Now, the other part of that story that's interesting is the son is the one who got in a car accident. So why did Hulk Hogan get sued?
Well,
Not the son.
because the son was part of the household, right? And so, for example, when you talk about, okay, who's driving the cars, who lives in the household, it's the mom, it's the dad, it's the children, right? They all have to be rated in the household and on the vehicles as well too. So that's why, they went after Hulk Hogan.
So if the son lived somewhere else on his own with his buddies and he wasn't part of the household,
Mm-hmm.
and he was driving his own car and he crashed, they wouldn't have sued Hulk Hogan, right?
Interesting question. I don't know.
It probably would have mattered who the car was insured under.
Yes.
That's right. That's what I was going
to. Same thing too. If Hulk Hogan has everything in a corporation, he probably wouldn't have got sued like he did. He could have sued the corporation. Right. But anyway, it depends on who owned the car too.
Yeah, very true.
And I have one other question. Would the personal umbrella policy negate the need for the landlord liability insurance, or would you want both, or?
Landlord protector policy. So he's saying, hey, instead of getting landlord protector, I'll just get a personal umbrella insurance. Would you guys cover that?
Do I need both?
Yeah, that's a great question. And once again, insurance companies, they're very brilliant at what they do. You have to have the liability portion on any policy, and a specific limit to start off. And that limit, for example, is $300,000. So what the insurance companies are saying, okay, so if there's a liability, we want your home policy to kick in first before the umbrella. So the umbrella is just an extension of liability that you have to have before you could even purchase an umbrella.
Got it. In order to purchase an umbrella, you need already the landlord protector policy.
And you have to have, at the minimum, with farmers, it's $300,000. I don't know. I think maybe other companies might have different limitations, but with farmers, you have to have at least $300,000 on any policy, and then you could have the umbrella. On autos, it's $250, $500. Okay. But anyways, I know we're talking about about.
No, that's a good one. There's a question.
Great question. Yeah.
Yeah, great question. There's a question. Why is it a good idea to have the tenants name the owner as an additional insured on their renter's insurance policy?
Oh, okay. So we'll keep in mind, and I think I understand the question. Keep in mind, the renter's policy is geared to protect the tenant. So they're the owner. Now, the landlord is added as an additional insured on the policy, but they're not the owner of the policy. The owner of the policy is the tenant. The policy is geared to protect the tenant, not the landlord. The landlord's only going to be protected if there's a liability that arises in the property because of the tenant. The landlord is saying, okay, well, before you come after me, which they're going to come after the landlord anyways, regardless if there's not enough money, we're going to go with your liability policy first. So if somebody comes into the property, slips, falls, whatever, bangs their head, and there's a liability, the tenant's renter's policy is going to kick in first. That's who they're going to go after first. But if they're suing you for $500,000 and the tenant only has $100,000 liability policy, guess where they're going to go? They're going to go for a landlord protector policy.
Got it. And then if the landlord protector only covers for, let's say, $300, then that's $100 for the tenant, $300 for the landlord protector. That's $400, and then the extra $100 is going to cover by the umbrella.
By the umbrella.
Got it. Cool. Good. Thanks for explaining that. I know Marco, you got to go. If you got to go, that's fine. We'll finish up with Ray here.
Okay. All right.
So we have a couple more. Are you going to take off, or you got to?
Yes, I do have to go.
Okay.
I got you, my friend.
Ray's in charge right here. All right,
Hey,
guys.
Marco, thank you very
Yeah.
much for your time, man. Appreciate
thank you.
We've learned a lot. Definitely.
Of course, man. Thank you for having me.
All right,
He
thank
taught me everything I know. I just ran with it a little bit, you know.
There you go. That's what you got to do, man. So, cool. So we have a couple more questions. Do we have to change our insurance if we own a trampoline? For example, if I have friends come over and their kids jump on, on the trampoline, do I need to add some type of coverage to that?
Some insurance companies, if you have a trampoline, they won't insure you. To tell you the truth,
True.
yeah. And some insurance companies, and I'm going to go out on a limb here to say most insurance companies actually exclude the trampoline. That's a huge liability.
Oh,
Yeah.
wow.
Remember, and I know I've already said it twice. Insurance companies are pretty smart. They're going to anticipate what's going to make them pay out claims and try to exclude it or make you pay more money for it.
So are like parties excluded, or what's the typical exclusion that we don't know about? Like, how is excluded, large gatherings, trampolines. I mean, what else? I mean, yeah.
COVID,
Well, not what
right?
else. I mean, I don't know if is house parties excluded or no? Can you throw parties?
No. We could party all day long. I mean, that's
Right.
COVID. Wait, you're thinking COVID, No,
I'm just thinking like it sounds like there's a lot of things out there. Also,
yeah, no, and there is. On a serious note, you gotta watch. You gotta read your policy, because many insurance companies, they have different exclusions. Not all of them. Like for example, I'm gonna jump into a business policy. Did you know that if you have a business policy, drones could be excluded? So if there's a drone flying over your building and now it crashes into your building, your window and all that stuff, that could be excluded from the policy. So there's different things that you have to look at, exclusions on your policy to make sure that you're covered. But go ahead, Voltaire, sorry.
Okay, cool. Another question. Thanks for that. Will it reduce insurance rates if you have a lightning rod? I don't know what that means. Samantha, you want to chime in? You have a lightning rod. What's a lightning rod?
Basically, it attracts, when there's lightning, it's a pole that attracts the lightning to prevent the fire damage in the house. We don't have it here in California as much because we don't have lightning issues, but that was my question. What do you guys know about that?
Every state is different. I think that's a great, I think that's a great question in regards to, what is covered and what is not. And every state is different. So like, for example, fire policies exclude earth movement. What's earth movement? Earthquakes, right? But because here in California, we have a lot of earthquakes.
So if there's an earthquake that starts a fire, it's not covered.
If there's an earthquake and it starts a fire, your fire policy is going to cover the fire. But but the damage to the building because of the earthquake is covered by the earthquake policy. But what you're asking, it's probably something that's not excluded here or even included, because it's not something that happens here in California a lot. It's probably something that is either you included or excluded, or maybe it's a separate policy in another state, because that happens a lot. So
thank you.
Cool.
Yeah.
Thank you. Any other questions for Ray before we let him go? All this has been pretty amazing stuff, man. Thanks for doing this. Any questions from anybody? If there isn't any more questions, feel free to reach out to Ray and Marco, and if not for your clients, you should do it for yourself, to just really, make sure that you're covered, because anything could happen and it could, again, lead to your financial ruin. And then the last thing too is, as realtors, we do have a choice as to who our clients go with in regards to their insurance, because usually what happens is we don't do anything and then the lender handles it. and then the lender recommends their insurance people. You know, one thing that I've learned doing my own insurance is, you know, these big companies like Farmers, you know, they're a lot more professional. They'll look at your entire portfolio, and at the same time, you know, they'll probably cover and pay when maybe some of these other companies might, you know, find a way to stop answering their phone or whatever, you know. So Farmers, you know, you could always get a hold of them. So Ray, if you want to just type in your phone number in the box in the group chat, and then that way, if anybody wants to get a hold of you, they know what number to call. Thanks for your time today, and if anyone has any questions, you guys could jump in right now. If not, we'll just go into the market update that I wanted to give you guys. Pretty brief market update. Thanks a lot, Ray. Appreciate you, and you can stay on if you want to learn a little bit about the real estate. But if not, we know you're a busy guy, so we'll catch you next time.
I'm gonna go try to sell a policy.
All right, there you go.
But thank you. And I just want to end with be careful with replacement costs, because even if you think that you're guaranteed 100% on the replacement cost, the insurance company is only going to pay what you're covered for. So even if you're at 100% replacement costs and the dwelling coverage is $250, that's what they're going to pay, the $250. So you want to make sure that you're being insured for that cost per square foot. If you look at it that way, I think you'll be in much better shape. So I just always worry about replacement costs. I'll leave you guys with that thought. Thank you so much. You know.
Yeah, that's great. Yeah, you don't want to start off with a 4-bedroom house, and then, you know, once the check comes in, you end up building a studio for yourself.
Yeah. No. Yeah, that's.
So, all right.
I sometimes lose sleep at night. I'm like, did I insure this guy properly? And I go back. Did I add the swimming pool? Seriously, sometimes at 10, 11 o'clock at night, I'm Googling again, did I add the swimming pool? But anyways, thanks, guys.
All right, cool. Thanks a lot, Ray. I'll catch you later. Hey, before you leave, type your phone number in the chat box.
You know what? Marco left me with his little, I don't know what this is actually, but I'll figure it out.
It's a fake iPad. It's one of those.
No,
they gave it to him for free somewhere.
Yeah. It's
all right.
I think it's an iPad, one of those. I don't even see a.
That's all right, man.
Yeah.
I'll give everybody your information, man. Thank you.
All right. It's 619-770-1903. 619-770-1903. And information is free, so I'll be more than happy to give you any information I can.
Perfect.
And if I don't
There we
know
have
it, I'll be the first to let you know that I don't know the answer, and I'll go get it.
Cool. All right. Thanks a lot, Ray. All right.
Thanks, man.
So now let's talk about what's going on with the real estate market. That was all good information. I'm sure you guys learned a lot. So 2 things is this guy. You guys are looking at my email. You guys are going to get an email from Raul. Follow this guy on Facebook. His name's SoCal Steven. Facebook.com//SoCal Steven. He's like an economist here in Southern California, and every 2 weeks he gives a live Facebook update with everything that's going on in the real estate world when it comes to you know, ups and downs. And so just follow this guy. It's really good stuff. So going back to the market, man, super hot market. This is what he sends me every 2 weeks. So demand is on its way up. So you see here in March, it started just crashing, and now it's way up. So there's a lot of buyers jumping back into the market. Just from 12 days ago, demand is up 14%. So 14% up from 12 days ago, which is crazy. Here we go, looking at expected market time in San Diego. So when Corona hit, market time started going way up, way up, way up, way up, and then now it's just dropping. So it's an inverted V shape drop there that we're seeing. So now market time is hovering around 60 days in San Diego, which makes it a hot seller's market. So if you have buyers, right now it's at 53 days expected market time. That's where market time's at right now. Expected market time 53 days in San Diego. So if you have any buyers, you gotta let them know, hey, no messing around with offers. You gotta come in full price or higher to get your offer accepted. Here we're looking at inventory, number of homes for sale compared to the last 4 years or 3 years. So you see it's lower than any other years. So with so little homes for sale, interest rates being low, it's just pushing the prices up. And that's why it's, you know, such a hot market. Luxury demand, it surged. So it was super slow. So luxury homes weren't really selling. They're taking a lot of days on the market. Now luxury, it's on its way up. So whoever, you know, is in those areas with homes, you know, 1.25 million or higher, just know that, you know, it's coming back around. There's a lot of demand there coming up. So let's see here, rates. According to this economist, he doesn't think that rates are going to be dropping any lower. He said that they're pretty much as low as they could get for the economy to be, you know, I guess healthy. Now, one thing to note is last week I was talking to Afonso Delgadillo, and he, I think it was on Thursday or Wednesday, he locked in 2 loans at 2.25%, 30-year fixed FHA, 2.25%, 30-year fixed. That's crazy. That's insane. I mean, I've never heard of those numbers ever. And those were regular first-time buyers, 2.25% interest rate locked in. So if you guys have personal properties or clients with real estate, it's a good time to reach out and say, hey, you should probably refinance. You should probably buy another property. I mean, just look at their overall scenario. It's almost like Marco and Ray, who we just talked to, they're insurance people. They'll sit down with you. They'll look at your entire portfolio and tell you, hey, you're underinsured here, you're overinsured here. Let's, you know, get this other extra policy. We got to do the same thing for our clients in the real estate thing. So we sold them a property 5 years ago. They have equity. Hey, and they still have a 5% interest rate. Hey, let me save you some money. Let me introduce you to my lender. They'll refinance you. Or, hey, you could do a cash out refinance. You'll still get, you know, less than a 5% interest rate. So you lower your rate, you pull out some money in order to buy an investment property, whether it's a condo or a duplex or whatever. So we got to be that person to our clients and really advise them. So just like Ray knows his stuff on the insurance, we got to be like that on the real estate side of things. Except with real estate, it's a larger gamut of information that we're supposed to know. So instead of just knowing real estate prices or, you know, certain, you know, neighborhoods, we have to know real estate prices or neighborhoods. We have to know about insurance. We have to know about interest rates. We have to know about loans. We have to know about escrow title. So unfortunately, it's, you know, our job's a little bit more difficult than, let's say, Ray's, but we have to be an expert in that. So the market's tough. You know, we got beat out on, you know, 11 offer property. I think we got beat out like on a 7 offer property, our buyers. So we have to better prepare our buyers, you know, make sure we write love letters with our offers and just really sell the agent. So any comments, questions about the market?
Yeah, hey, Walter, a lot of clients or a lot of people, they still believe that COVID has dropped pricing, that the market's going to crash. We just have to continue to inform our clients or just the public in general, because there's a lot of misinformation.
Yeah.
And obviously we do this on a daily basis, and it's the other way around.
Yeah, I agree. I think it's all about educating ourselves so we could in turn educate our clients. So if you start, you know, ringing off specific numbers, you know, like 53 days expected market time in San Diego, where anything under 90 days is a seller's market. You know, anything under 60 days is a hot seller's market, historically. So once you start ringing off specific numbers to your clients, then at that point, they'll trust you. Does that make sense? So when you start leading with value and just start, you know, ringing off specific numbers, oh, there's about 5,000 homes for sale right now compared to 12,000 homes for sale in 2008. So if you're expecting the market to drop like in 2008, there's 3 times as many homes for sale back then. Or actually there's 14,000 homes compared to now there's 5,000 homes. So it's just not going to happen. Prices aren't going to drop. So, and a lot of people are just reading headlines because, you know, headlines sell newspapers and they sell clicks and ads and all this stuff. So of course, you know, those people who write those articles, they got to make something catchy. So they'll say something like coronavirus, you know, tanks real estate market or whatever. We just have to come with good information. Like you're watching that guy, Steven SoCal on Facebook, The Economist, every 2 weeks, just watch his report, educate yourself, take notes. And then that way you're able to provide a lot of value to your clients. I'll give you a quick value story. I went to a house the other day, brand new buyers. One's a physics teacher and then the other one's a engineer, and they hired us and we beat out 2 other agents. And first thing I did when I went out to show the property, I start talking about the foundation, how to tell whether it's a good foundation, the different types of foundation, the roofs, how to tell whether it's a good roof. You know, I talked about the different slabs between the house and the garage and the driveway, and that's why there's cracks. So I started to really educate them. That's what I did. And if there was any doubt that they went with the wrong agent, when we beat out those other 2 agents, there wasn't any doubt after that meeting. And they even told me, they go, man, I really like that you're educating us during, you know, just like looking at a house, right? And, you know, I pointed out, you know, the property had older windows and, you know, and it wasn't energy efficient. So once you start going into details on different things, instead of just like, oh, it has carpet and it has quartz countertops, you know, once you start going past all the superficial things, then you're really adding value to your clients. So going back to educating your clients, watch this stuff, you know, be very specific about the things that you're learning, things that you're teaching your client. And I think you'll be able to get your offers accepted, because then they'll listen to you when you tell them, hey, look at, the asking price is 520, but you need to go to 530 to get your offer accepted, and you need a quick close and a $10,000 deposit, instead of them questioning you because they talked to their comadre or whoever who bought 2 houses and they're an expert now. So I think it's good to do that. Good point.
I have a question, Voltaire, about those offers that were lost. Would you have offered differently, or did you pinpoint something that you could have done differently? I don't know the specifics of the case.
Yeah, good question. On the 11 deal one, I personally wouldn't have done nothing different, just because, in my opinion, the property wasn't worth the amount that the prices went up to. So I wouldn't have gone back and told my client, hey, you should definitely pay this price, because it wasn't worth it. The second one that we lost on with 7 offers, that one was that engineer on that same house. I told them, hey, look it's going to sell around 580s, the 580s, even though they're asking for 550s. You know, I think it's a good deal at 560, but it'll sell around 580s. And it was their very first home. So when you're dealing with a first home buyer like that, where they haven't been out and experienced losing out on properties or looking at a lot of properties, it's a little bit more difficult. So the property did sell in the 580s. And that right there, I just forwarded the message to the client saying, hey, it sold in the 580s. You wrote at 560, so it didn't get accepted. And they were just blown away. They're like, oh my God, like really? It's that type of market? Like, you know, they heard me, but they didn't really understand or believe me until they saw that basically what I had told them, you know, a few days before happened, you know?
Okay,
so,
thank you.
So on that one, maybe I would have just been a little bit more clear and said, hey, look, in my opinion, if you don't offer at least 580, you will lose out on this property. And if you're okay with losing on it, then offer less.
Hey, Walter, I just wanted to give you a quick recap. The client letter does work. I just got an offer accepted, and the client letter was one of the key points
Woo!
accepted.
Nice.
Yeah.
Yeah, good. Yeah, it does work. It's as simple as this. There's 10 offers on a property. 9 of them are just numbers and paper, and then 1 of them has an actual face to it and a story to that. And if you tell a story good enough, anything in life, you'll get whatever you want out of life. So if that story is told to the seller in a way to where they feel something in their heart and they're attached in one way or another, then you'll get your offer accepted. It just got to be a hell of a story. You know, it's got to be relatable. So they definitely do help. The other thing too, I mean, they do help and they do work. So do that. What else? Any other questions?
Yeah, is that your dating advice too?
Ha! You got to tell a really good story so you can get the girl of your dreams, right? Yeah.
I have a question about the seller's motivation. How do you ask the seller's agent or the listing agent what the motivation is? Because I know that some seller's agents are just like, oh, it's obvious because we want to get the house sold or whatever. But what is the right question that we can ask about the motivation?
It's actually shockingly simple. I always ask the same question, which is why are the sellers selling? And I mean, I don't think I'm trying to think back. It might have been years since somebody's told me like some smart ass answer, but no, they usually say they're selling because they outgrew the home. They're selling because they had another baby. They want a bigger home, or, you know, they want to cash out. So yeah, I mean, straight up. And just, you can't be timid when you ask those questions. Same thing with, on those offers, you know, 7 offers, 11 offers, you know, I ask them straight up, oh, you have all these offers. What's the highest offer that you have? You know, and then they're either going to blurt it out because they're like, oh shit, you know, they just blurt it out, or they get all weird and they go, oh, I can't talk about that, which is actually BS. The only way that they can't talk about it is if they have a specific clause within the listing agreement where the owner asks them not to talk about the price. So there's nothing preventing them within a standard listing agreement to not share the price. And there's no code of ethics that they're violating or nothing.
Okay, thank you.
Yeah, you're welcome. All right. Any other questions? If not, we'll wrap it up. All right. So, hey, you know what? We're heading into the summer market. Typically, this is where you make most of your money during the summer. Obviously, COVID, you know, slowed us down. But now with this pent-up demand from COVID and the summer market, it's going to be crazy, in my opinion. So if you don't make money in the next 3 months, if you don't sell some homes, you know, consider another industry because this is where you're going to make your money. And it should be one of those markets where, you know, with interest rates so low, you know, I have a bunch of condos where it's $1,800 a month to buy, to own, where rent is somewhere between $1,600 and $1,700. So if you can't find buyers to want to pay close to rent, you know, it's like, when are they ever going to buy? So I think it comes down to having a lot of education, inviting your clients onto these workshops that we have, like this insurance workshop. Invite your clients to it. You know, that was a bunch of great information that they shared. You know, cool. Thank you for your time. We'll be talking soon, and get out there and sell some properties. Real quick, a question: to get more traffic going, you know, last week we were advised to post listings of other realtors. Is there a correct way to ask for permission? The correct way, I think, should be like out of respect. Hey, Melissa Tucci from Century 21. I noticed that you just listed this property over here on 28th and B Street, and I wanted to ask your permission if I could advertise it on Craigslist or on Facebook or on my social media. That way I could bring you a buyer and get more exposure to your listing. Is that okay? And 99% of the time, they're going to say yes. So again, what's the benefit for them? People are always asking, what's the value or benefit of me doing you a favor? It's like, hey, I'm going to bring exposure and I'm going to help you sell your listing. And that's what they're getting paid for. That's why they're seller hired them is to expose the property and bring them offers. So that's the benefit to that agent in that scenario. So all right, best of luck. We'll catch each other later. Enjoy the beach, Ozzy, man. You look like you're in a pretty cool pad over there.
No, man, I'm in here in Rosarito for today.
Yeah,
So.
that's dope. Yeah, enjoy the weather down there.
Thanks, man.
All right, we'll catch each other.
All right, bye,
Peace
guys.
out. Bye. Later, Art.
Later, B.
Peace out. Hey, you didn't comb your hair, Art, or what? Why you on? No.
Oh, you see me,
camera
man?
mode? No.
Oh, man. You want to go
Okay.
viral?
I'll catch you later, man.
Later, bro.